When we do have those ETFs, it's not only going to enable certain family offices and institutions to be able to buy Bitcoin immediately. It's just like buying a stock. They can settle it with their prime broker. It's no big deal. They have a custodian already. But that's one step. The second step is it's going to force an entire sector of investors that have been ignoring it. It's going to force them to look into it and understand it. And so having that understanding is really the next big step, which makes me tremendously bullish.
Vailshire Capital Management's James Lavish gives us his update for the crypto market and why we're going to see a massive surge in price for Bitcoin very soon. Lavish explains that while speculators initially drive price movements, giants like Blackrock have entered the market and shifted the cycle by pushing prices to the increase we've seen just in the last week alone. He also points out that historical trends indicate a parabolic increase in market cap in the coming months. As we near the Bitcoin halving in March of 2024, Lavish provides insight into why, realistically, we could see a $70,000 price per Bitcoin by January. With real money now flowing in, he emphasizes that the crypto market has become more significant than ever, and institutional investors are driving the price of cryptocurrency that will yield massive gains in the next 3 months. Let's get right into the latest interview with James Lavish as he gives his prediction for Bitcoin and the crypto market. Don't forget to share your thoughts and comments down below. Let's get right into the video.
I'm hugely bullish on Bitcoin. I came to the party much later than most of you. And I also come from that institutional investing world like Mark does. However, and that's part of the issue is that the people who have benefited the most from this system are not apt to look at Bitcoin as something that helps them because they don't need something else. Warren Buffett doesn't need or want anything else. Neither does Charlie Munger. Neither does Jamie Dimon. Like, they do not want this. Why? Because it is tremendously disruptive. Now, why doesn't somebody like Elizabeth Warren want it? Because she cannot control you with it. It is out of her purview of control, and that's a problem for her. So that goes back to your point of, okay, as this gains traction, and as we see in the next 3 to 6 months, we have multiple Bitcoin spot ETFs approved, which enables many institutional investors, small offices, small family offices, and those who just have not been able to convince their investment committee that holding Bitcoin is something that is not a reputational or a career risk. They have not been able to get to it because of the internal controls on buying, on settling, on custodying, on pricing, on market, on Bitcoin. They just have not been able to get there. And so when we do have those ETFs, it's not only going to enable certain family offices and institutions to be able to buy Bitcoin immediately. It's just like buying a stock. They can settle it with their prime broker. It's no big deal. They have a custodian already. But that's one step. The second step is it's going to force an entire sector of investors that have been ignoring it. It's going to force them to look into it and understand it. And so having that understanding is really the next big step, which makes me tremendously bullish because there's no arguing that the fundamentals of Bitcoin, it trumps even that digital gold narrative, which will be the first narrative. That's going to be the first narrative. I agree with Michael Saylor on this, that the first use case for most investors is going to be digital gold. Then we move into the we need to control this phase, right? So what are the options? Can they ban it? It can't be banned. I mean, you've seen what happened in China. I don't know if they pretended to ban it. It's difficult to understand what their policies are with that regime, but China is still one of the biggest Bitcoin miners on the planet, if not the biggest, right? So I think we get into the spot here where people are a little bit worried about, but once we get the ETFs and it's widely owned, they can't ban it. I just can't see them working against BlackRock and Fidelity and State Street and Texas Teachers and CalPERS, and like that would be such a monumental move. I can't get there. They could tax it significantly in a way or something, but I don't. These ETFs, once they get approved, that's like a stamp of approval that I believe will put this into the mainstream, and that's it. The cat's out of the bag.
The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, Lavish says this is just beginning. Comparing the initial years to the current widespread interest and investment with a giant spotlight on Bitcoin ETFs, he highlights this being a significant development in the financial ecosystem. He believes that Blackrock and Larry Fink will lead the charge in obtaining regulatory approval for a Bitcoin ETF. Lavish believes this will underscore Bitcoin's enduring relevance as an asset and its potential as a hedge against currency devaluation.
So if you can pay for your food and energy and your housing, okay, then you can survive and you can have a somewhat comfortable quality of life. However, when prices rise so much and you're at the low end of that earnings curve and all asset prices rise, well, that the multiplier effect on those larger things, so anything that's not a necessity ends up being out of your reach. So your quality of life is likely to diminish. So because you're not going to be able to keep up on that any of the larger purchases. You need a new washing machine, you want that new TV. Not that that's necessary, but maybe that would raise your quality of life, or maybe you want a better bed. That would raise your quality of life. But have you seen the prices of beds? So like things like it. I just don't think they're keeping up in that sense. Number one. Number two, when you have these cycles, and this is the problem. This is what maddens me. Is that when you have the manipulation of money and you're going in these cycles, you continuously go in these, ebbs and flows of the economy. And then you get into one of these downturns. Well, who gets hurt? Who gets hurt the most in that downturn? Who loses their job, right? You're going to have a little bit of a barbell, but typically, you're having a swath of wage earners that are not critical to a company that get laid off. And so all those layoffs and that recession winds up just doling out economic pain across the board. The people who lose are also the ones who their wages, their real wages are not really keeping up. And so who is that? And it's the ones who don't have any assets and they don't have any debt. So they're not benefiting from those paying back cheaper dollars, but also they're being hurt by this hidden inflation that you cannot tell me that the price of goods and services over the last couple of years are only up 12% or something, not even. So the CPI numbers they're absolutely being manipulated for a good purpose if you're at the Fed and the Treasury. So the issue is, are those metrics true? Are the low wage earners really keeping up? Are those real wages really keeping up with inflation? Because if you look at if you ask anybody at the lower end of that echelon, then you're likely to get the answer that is no. And the other thing is, how many jobs do they have to work to keep up with that inflation? Go back to what you were saying about the confidence in the dollar. So the issue is that, well, the Fed they're supposed to have stable, they're supposed to make sure they oversee stable pricing, right? So they want to make sure that we have stable pricing in the system. What does that mean? That we don't have inflation that runs out of control or deflation that runs out of control. You want stable pricing. And they want full employment. That's supposedly their two mandates. In reality, why do they need go to first principles? Why do we need stable prices? Because we need confidence in the dollar. Okay, now who are they answering to? Well, they're answering to the Treasury, because the Treasury needs a stable dollar. Why? Because they need confidence in dollar. Why? Because they need to keep borrowing. They need to keep issuing debt. They need to be sure that they have that avenue to facilitate all the spending that's going on in Washington.
Lavish anticipates that the crypto summer will continue its parabolic run until June of 2024. As we stand on the edge of the winter months, the crypto market is poised for a meteoric surge in prices. He illustrates Bitcoin's current undervaluation, drawing in investors and enticing speculators eager to ride the waves of September's price fluctuations in pursuit of profits. His outlook is fueled by the impending wave of mass adoption, which he believes presents an unparalleled opportunity to get in on the action. Lavish sees the race toward a six-figure price target set to unfold in just under a year. What's more, he highlights the intriguing historical pattern of Bitcoin's value surging 10x with each halving event, hinting that 2024 could catapult Bitcoin to an unbelievable $100,000. What do you think about James Lavish's prediction for Bitcoin, the crypto market cap, and the institutional capital pouring into the space? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.